Hello, everybody. It's January 19th, 2023. You're looking at the micro crude 187 contract bar chart for today. I'll spread the chart out, but I'll show you first what, we were looking at going into today. Remember that, from the 9th, we created the failure, confirmed it on the 6th, and then the open of the night on the open of the 9th. As soon as that bar opened, we got the label. We knew at that point that, price was at least going to try to go up to take out that resistance right there. Over that time, it opened up on the 9th right there. You spread that out for you so you can see it a little better. Right there. As soon as that bar opened, that label appeared, and from that point, price is going to, at least going to go up and challenge that, whether it breaks through it or not, it doesn't really matter. But since that price, we're looking at 73.80 on the open of the 9th, and we're about $7 higher, nearly $2 higher at the high yesterday, but $7 higher than the open on the 9th. And that's $7,000 per contract just on the, $700 higher on the micro per contract. And you're looking at anywhere between 20 to 70,000 contracts being traded here per day. So the expectation, after yesterday, it went up and took out a new high. We talked about this in the room. Price goes up and makes a new high, you're going to have profit taking. Well, that last high was from the beginning of the year, right after we came back from the holidays, Christmas, New Year's. So at that point, the expectation, especially since, the day itself pulled back. Now we can see that yesterday a little clearer. You can see where yesterday it made that new high. As soon as it made the high, absolutely perfect, went up, tested that high and failed. And from that point into the close, that drop was 81.80, $2, over $2. So at that pullback, the expectation is, I looked at this overnight, that we're either going to drop or we're going to settle in. And there's the settling. There's that, where the market, it bottomed, then it failed. And this is where the run up came today. Now, the only portion of that run up that we're concerned with is what occurs between, 6 o'clock in the morning and noon. So, that's what we're going to go over today. And I'll try to be quick. So out of the gate here at 6 o'clock in the morning, we see at this point resistance had already made a new high. Support is making a higher low. So the expectation is here already, even though it's a little, that price is going to go up at least until something challenges it to the upside. All right. So out of the gate, there's my failure bar. Somebody had mentioned the other day that they want me to spread this out a little more to make it clearer. I apologize. I'm just a nutty professor. There's my entry bar, or there's my failure bar. When that bar closes, which is the confirmation, the entry will be on the open, which is here. And the third check, your oscillation is check number 1, your confirmation bar is check number 2, and your target is check number 3. You can check those 3 points in any order that you want, but all of them, excuse me, all of them have to be correct for the trade to take place. All right. Failure, confirmation, entry. Now, once we've entered the trade, our exits are going to be based on you personally. You're going to take it off of the bars. You're going to take it off the failures. Again, we do this every day. Red bar exit, black bar exit, failure exit. I'll go through and I'll list. Here we have a 3-bar exit. If you're not taking your stops off of each individual bar, which would have put you out up here, there's your 3-bar exit. So here on your entry, confirmation bar, and there's your entry. Now, I got guys that grump at me all the time. They go, look at all the money you left laying on the table. And I go, this is your choice. Exits are choice. Stops are not a choice. When you place your stops and you don't hit a stop and go, well, I don't think so. No, stops are not a choice. Exits are a choice. And you can exit off of the butt of every bar once you're in a trade. And instead of 8 points, you would have made, well, here, I'll mark it. $27. So you made $19 more. But the point is that it's consistency. If you're going to do that, do it consistently. Okay. And if it helps today, I'll go ahead and I'll show you where those, bar exits are. But there's your first trade. Now, you're next. You're always looking, background color is white. You're always looking for support oscillation, support labels. Okay. There's my price failure. Great. Confirmation bar is green. Excuse me. Hiccups. Wrong color. There's a match and a confirmation bar. Well, number one, we don't trade for matches. I want you to pay attention to them. I want you to understand them, but they're idiosyncratic. They work when they work and they don't when they don't, but it's because I'm showing you what's consistent and what's not. Beside that, our target oscillation was a failure and we don't trade toward failure. Next oscillation, you have your price failure, confirmation bar is green, wrong color. Next oscillation bar, great. Confirmation bar is green, wrong color. Notice how the charts will, a lot of times, not always, but naturally keep you out of bad trades and consolidation. Okay, now, next. Failure bar, great. Confirmation bar, red. Confirmation bar is not blue. The equivalent of a blue bar is when price closes higher than it opens. In the case of this bar, and I want you to look at it, it opened, closed, and hit the high all on the same bar. So if it wouldn't have opened and closed on the same bar, price closed at the high. So for all intents and purposes, for a manual trader, yeah, this is about as good an entry as you can get. So we take the entry here. And again, if you're going to take your stops off of each individual bar, as soon as you broke here, you're out of your trade. Okay, I'm going to take mine off of, price failures or 3-bar exits. Again, just to be consistent. And there's a 3-bar exit. Okay, and again, yours would have been, if you took them on the bars, see, from 24 to, it'd be 30 points instead of 19 or $11 more. All right. Now, next trade. Let's see what we get here. Oh, you got a price failure. Great. There's my confirmation bar. Blue. Wonderful. My target. Everything's perfect. Great. And there I go. There's my entry. Now, again, you have a red bar and red bar exit. We don't argue with that. I want to show you both ends of this. I'm going to take that trade because it's a perfect trade. And as soon as I get my red bar, I'm going to exit that trade. Okay. I made a point. Now I'm not going to exit. Now I'm not going to argue with the trade. I'm going to argue with the trade. I apologize. Been a long day. So what's going to happen is I'm going to go, oh, well, it's closed toward the top of the bar. It's still going to go up, and it does. Now, if you're trading and keeping your stops on your bars, you're okay, except that you would have already been stopped out and never been able to get this because you broke them down below here. The other option is to take the initial stop off the price failure, and then once you're in profit, then start adjusting the stops. But I digress. So if you're in here, 1, 2, 3 bar exit, there would have been your exit if you would have ignored, I mean, rule base, if you'd ignored the red bar. So you'd ended up losing money instead of making a tick. Okay. That's my only point. All right. So again, we're going to still white, still look. Sorry. I twitched. Oh. My mouse is having its way with me today. Excuse me a moment while I now adjust my oh, where were you? And I apologize for this, Pipples. There we go. I'll keep better attention on my mouse. So there's my failure. There's my confirmation, my target, new high. There's my entry right on the open of that bar. And again, comes right up, gives me a red bar, and I exit the trade. Now, staying with the trade, there's another red bar exit. Well, if I'd have held on to it and pulled back, I'd have been out up here. So this one would have worked out a little bit better. But I don't care. Learning, I can't stress enough that learning each and every, I mean, there's only a few trades. There's only a few exits. Just trade them based on the rules and you'll be okay. Now, next point, there's my price failure. Wonderful. There's my confirmation bar. Great. And, we're already in the middle of space. I call this the space trade because you're in space. You've already well blown past your last labeled new high. You are making new highs. So at that point, there's my entry. Now you're starting to create the top up here. But even with the entry here, there was my, move the stop up here. If you'd have been basing it on the bars, you'd have been out of here with, like 4 or 5 points profit. But there's my exit. So I end up losing a tick on that trade. Losing a point. No, show you. Now, was there any precursor? Was anything to give you a heads up saying, well, once you're in that trade and you hit the top and then it fails and then it hits a top, but really doesn't break through, comes back down and fails again at any point, especially after those 2 close bottoms, just go on and say, okay, price is starting to slow down. Well, this is 9 o'clock in the morning. And crude oil with 9 o'clock, for those of you guys that trade it, know that the market does slow down around 9 o'clock. So go down here and grab another trade. Set up. And there we go. Now, the breakout trade. What is it? Well, resistance point to resistance. We see the last 2 tops. Price is making a new high. We see the last 2 support levels here and here. Well, even here and here was making a higher low. So, the trend at this point for price is going up. So there's no color change trade here short because it's against trend. Trend right now is going up. So we're just going to sit back and wait. But in the process, we get a failed oscillation and a confirmation bar. Now you have a quandary going on here. You know the trend of the market's going up, but this is a viable trade. This is this is a rules-based trade. So because of my experience, I look at it and go, yes, this is a rules-based trade. Yes, I'm going to take it. I don't have a lot of confidence in it. And I don't because, at this point, if you were watching it play out live, it was spiky. You could see that there was a lot of, trades coming into the market at this point, but I'm going to show you. So there's my entry. Okay. And, it comes out blue bar, when this confirms, this will be a failure and I'll get out, but I'm already stopped out at this point. So I'm stopped out on that bar right there. And the entry was right there. That was painful. $30. And if you take every rules-based trade, then you're going to take that trade and you're going to go, I know why it did that. And then the next time that something like that sets up, you can always look at it and go, well, maybe I won't take that the next time if it sets up exactly that. And again, the only reason that it was a weak rules-based trade was that the trend was just raging in the opposite direction of your trade. So now you're out. So at that point, that exact point that you exited that position is also another reason to enter back into a trade. Why? Well, you've got the color change now in the direction of your trade. Now, how strong is it going to be? Well, we don't know, but we're going to see. So the entry then becomes the exit. So if you were short here, you would have completely reversed your position here. Now, new high, pulls back, gives you a price failure. If you're in that trade and adjusting it off the bars, you're out about it right here. And that being the case, 22, and you've got 11 points here of taken back that you got here. But we're going to take the trade here. It pulls back here, but before that, we get this failure. And this failure is telling us that, hey, failure of resistance, I don't want that. As soon as it confirms, I'm out of my trade. I don't want failure of resistance if I'm buying the market. I want to make new highs. And that little thing right there just saved me a bunch of money because, from here to here, if I wouldn't have taken the exit off that failure, I'd have been stopped out down here. Still made a couple ticks profit, but, not 14. All right, now. Up, we're looking for buys. There's a failure. Great. Confirmation, wrong color. There's a failure. Great. Confirmation, wonderful. Target, no. I don't trade toward failure. So, we're looking for, another buy. Oh, and then price breaks through. Okay, great. Resistance is still making new highs. Support is making higher lows. So at this point, it's not a color change trade short. So we just hang on. So now we've got a new low and price goes up. Oh, great. We can see it spiking. Well, at this point, we know that as soon as the color change takes place, which is when we break through either that failed high or new high, and this moved up, it didn't have a chance to create a failed high. So as soon as it broke through that bar right there, that little price right there, it changed color. Well, that's where your buy executes. Well, next bar out. So I'll mark the trade there in a second. But look, there's your red bar and there's your exit. So there's my entry. There's my exit. Three whole points. But look what it saved us. That red bar as the exit saved us on that whole pullback. Now, let's look at the next bars as they come out. You get, pullback. There's my failure. Wonderful. Well, and now I get a red bar. Well, not only is it a red bar, but the open and close is on the lower half of the bar. No, in either case. So it's like, and at that point, I have a target of a price failure. Yeah, there's all of that. So again, by reading what's on the chart, this is going to keep you out of taking a buy here. Now, price pulls back again, fails. Wonderful. There's my confirmation bar. As again, when the confirmation bar closes, the label appears, your trade is on the open of that bar. Okay, everything's set. No. My target is a failure. No. So now it pulls back again. I got a failure, and then my confirmation bar is blue here. Okay. So now you go, oh, now it's okay. I have broken through all my failures. And at the point that my confirmation bar closes, my target's a new high. So it's like, okay, great. So again, failure, confirmation bar, and it has to have broken through everything so that your last target's a new high. There's my entry. Okay. Now, if you're, here's where your bar, you get into it, it pulls back. If you'd have stayed into that first failure, you'd have been out up here. But remember, I'm just marking them off the failures. There's my entry, pulls back, readjust the stop, pulls back, readjust the stop, pulls up, pulls back. Okay, readjust my stop. Oh, that confirmation confirms that failure, but before that, I'm stopped out here. Excuse me. So I've entered that trade here and exited that trade here. 18 more points. Now, we're getting close. It's now 7 minutes till 11. But more so at this point, this is when the news report comes out. So we're only looking for buys. We're not going to get any more buys here. It pulls down, it breaks. This is now making a lower low. Great. So now we have a new high and a new low. So the breakout trade or the color change trade is no longer valid in either direction because we have no resistance and support continuity. Isn't that a lovely word? So price comes up, makes a new high. Wonderful. Now, if this had been a failed low or a higher low, then there would have been an execution here. Okay. So, but no. So now at this point, we have a new high. It pulls back. Now we have a failure. Okay, great. Background color wrong. We're only looking for buys. Pulls back, gives me a failure here. Wonderful. Confirmation blue. Wonderful. Target wrong. Okay, the next one. There's my price failure. There's my confirmation. And since we've already taken this out, my only target at this point is the new high. So we can go, okay, I can take this trade. There's my entry. Immediately entering the trade, this thing creates failure. And again, I don't want failure as a target. So I'm in the trade here. It confirms here and I'm out here. So this trade here we lose 5 ticks on. But again, by keeping our, by reading our chart and keeping our stops tight, we're protecting our profits. If you're trading bar by bar and you're your bar here and here, you're out of that trade here. If you're trading with your stops on each bar. Yeah, you got out here, but my trade allowed it to retrace a little bit to be able to get me out. It's like, just follow the rules. Whatever you're doing with reading the information on this chart, just do it consistently. Okay, so now price drops again. Nothing we can do about it because, area is white. comes down, new high, new low. No color change trade here again, because we have a higher high and a higher low. We're getting close, coming into 11:30. Now, background color changes green. We now have a price failure setting up. There's your confirmation. There's my entry. Now, on my entry here, price kind of stagnates. You can see it drop, it gets choppy, blue bar, goes up and creates another failure where I can adjust this. And then I finally get stopped out here on the price failure. Now, if you're in the trade and you're adjusting it based on the bars, your entry is the same spot. You come down here and you're adjusting it here and you're stopped out here. You're stopped out a little bit better than I am. But remember, I'm stopped out up here and there's my exit. And let's look at time. Time of our exit there is about 11:30. And we just look at it and go, okay, whatever's left of the day is left of the day. I mean, our cutoff point's 12. We'll see what happens. There's my price failure. Now, remember, we have no discernible direction. Okay. We have the last resistance up here as being a new high. We have last support down here being a new low. So we're not taking a color change trade. But what do we have here? I have a price failure. The confirmation bar, when it closes, has already taken out the failure, which has changed the background color green. So all the conditions apply here for taking this trade because the confirmation bar has already changed the background color. So there's my entry. We have 1, 2, 3 bar exit, and then there's my exit. And again, if you're trading based on the bars, you're out a lot better than I am. But anyway, there's my confirmation bar, there's my entry, 1, 2, 3, and there's my exit. Now, at that point, it's 11:43. So it's like, okay, well, let's see what's going on. Well, 11:43, 11:45, here we see the price failure. We see the oscillation in the process of being created. As soon as that blue bar closes, we have failure, confirmation, target, entry. Enter that trade, and we're here with the red bar. Now, remember, red bars, exits, whatever. Even though this closed at the top, I'm taking that exit. I mean, I don't argue with, let's say that I argue with very, very, very little red bars. And why? Because if I'd have stayed with the trade, my exit would have been way down here, 3 bar exit. Okay. Now, I'm done. I feel exuberant, whatever, this thing exits right at 12 o'clock and we'll get a total. But I want you to see the next trade out. There's, 6 minutes later, if you were sitting here and looking at this going, well, maybe I'll take that trade. And probably the best trade of the day. Now, and that lasted till 12:30. Now, if you caught that, I mean, if you're sitting there and watching it and whatever and happen to caught that, that's wonderful. If you didn't and you just closed it off at 12 o'clock, that's fine too. I mean, you want to set strict rules for yourself in those trades that you're taking. You want to maximize the amount of profit that you're taking on a day-to-day basis. At the same time, you're minimizing risk. So let's see what our total was here. And we're going to take that trade off because that doesn't fall into the realm of reality. 37, 55, 58, 62, 72, 99, 100, 127. So 127 positive points, and then 31. Move these out of here a little bit so I can see stuff. I want to make sure that I don't miss any of the entries and exits for the video. So I got 31, 39, 44. So we have a net of $83 per contract today, with 4, 5, 6, 7, 8, 9 winners and 4 losers. All rules based, no art. And again, you know, we could, you know, maybe we could have differentiated some of the losses. This 30-point loss here over time, you probably won't ever take that. This one up here at the top, you know, a lot of the guys, when they start seeing these failures, they won't trade following failure. Well, you know, it worked well here, it just didn't work here. Personally, as long as my target is a new high or a new low, I'm going to take it. Okay. Down here at the bottom, you know, we were trading into this new support level, and it didn't bite us too much. I mean, all the losses, the only loss that was bad today was the 30-pointer, which, you know, we talked about why there was potentially a reason why you wouldn't have taken the trade. So anyway, hey, lovely. We have the end of the day. So another good day today. I'll try to post some other videos. I'm going to later today do gold and micro gold. So hope you guys have a great day. Thanks for stopping into Price Physics. This is the GUI. I don't know if I can say it on YouTube, but the GUI's the shit. Have a good day.